Good evening, guys. Today is September 20th, Friday. Hope you guys had a great week. NASDAQ was tough today, down 200 points, almost 1.53%, primarily driven by weakness across the board. I don't think there was a single stock necessarily to blame. If you look at the big seven on the NASDAQ, whether it's Apple, which was down almost about 1.4%, we did mirror them. If you look at the NASDAQ, it mirrored Apple. Microsoft was down as well, and so was Amazon. All of the stocks pretty much took a breather today. Um, and on the SPX, S&P 500, also down about 1.26%. Still very iffy for the week. I'm still not convinced that this is a time for me to enter. I've been on the sidelines, as you guys know, since August. The last week of July, first week of August, I've been just mostly in cash, 90% in cash, taking very small trades, mostly day trades, and staying away from any swing positions. Dow looks like it's down much less than the other two, but it's still coiling towards what could be hopefully a good end of the year, but doesn't look very promising right now. One of the stocks that did very, very well this week was Netflix, which had their earnings. So I'll quickly talk about the earnings itself. One of the key things to note about Netflix earnings, overall revenues and also their earnings were very, very strong, which was beating expectations. As you could see, just to give you a little bit of a context, they reported 3.73 when the estimate was $3.48 a share. And then the revenue was 8.54 billion versus 8.53 billion, almost a $3 million upside in terms of revenue. So that was good. But the big part was they're getting $6 billion in free cash flow, which is awesome. Very good movement. And then the other part that is excellent actually for Netflix is that they actually are looking to raise prices on their top two tiers. So it's going to $22 a month from the $19, $18 that it is right now. They're pushing a lot more people towards the ad-free tier. They also added subscribers, 8 million subscribers versus what they expected was in the 4 to 5 million range. So overall, good things for Netflix. On the day, if you can see on the daily chart yesterday, after the earnings, they shot up pretty significantly. Wasn't a great candle. I expected a much stronger candle, but it's not bad. It went from somewhere in the 345 range up about almost $60 to the 401, 400 range. So strong candle, very good movement by Netflix. Let's see and apply our 5-step process, see what we get. Financials wise, I don't think there's too much you can complain about Netflix. Solid company, growing from about $8 billion, 8.89 million almost dollars, growing consistently, now going into the single digits. So that's one of the challenges for Netflix, right? They were growing at 30% 7 years ago and consistently have been going down to the 20s, to the teens, and now last year they were actually in the single digits growth, still giving a lot of profit, 5 billion in profit. This is a company that has extremely strong 60 to 70% nearly gross margins and net margins of roughly about 1/6, about 16% net margin. So this is nothing to sneeze at all. And after a slow set of growth, if you look at this, 1.2%, 1.8%, 3%, 2%, suddenly they had high single digit growth, 7.8%. So that's a very good sign. That's one of the reasons why the stock really shot up overall. Balance sheet, about $50 billion in cash and assets, very strong. Limited debt, about $14-15 billion in debt. Not a great sign, but still is very, very good. And then if you look at the valuation of the company, it's about 40 times PE, which is still a little bit high, but remember, their margins are close to about 40% gross margins, 20% almost net margin. So strong cash flow business. They throw a lot of cash out, 6 billion in cash, and they are running away, becoming the global leader in the streaming media business. Disney is not even a close second, although they can claim to be. Let's look at the stock from a technical perspective right now. So steady performer, and then went through a huge ramp up to almost $700 during the COVID timeframe, taking a big hit. So stage 4 decline, sorry, all the way to 2022 in July. And since then has been rallying somewhat and then taken a break again early part of this year. So right now, if you look at it, it did an uptrend and then seems to be on a downtrend, but this seems to be trying to make a reverse again. Look at the last candle. This seems to be the green candle trying to make a reverse again. Let's see where that goes. Overall, I'd say there's still a lot of room. There's going to be quite a bit of resistance to go over the previous support and the current resistance. So this was the support. It touched us multiple times. This is the resistance, become the resistance right now. And most likely, if you look at the resistance now, it should probably be in the 300 time frame, 300 range, sorry, but I doubt it's going to go all the way down there. 313 might be a good resistance point for it. Long term, we are trying to move into a stage 2 again, but this clearly looks like a stage 1 if you look at it from a monthly chart. On a weekly chart, okay, so after a big move up all the way to November 2021, where it moved up, it just took a beating because of the 2 quarters where it announced 1.8% growth, 2% growth. That's bad growth on a quarterly basis. So earnings were very poor, both of those. And there was a lot of questions about the stock, amount of money they're spending, the growth that has tapered off. They were doing aggressive moves on the password correction, making sure that they cut down on people that were sharing passwords. But if you look at the stock overall, this seems to have formed a very poor pattern. This is almost an inverted chart. So this, after the base, this inverse base, should have gone down a little bit further. Doesn't look very good overall from this perspective. This is 1 point. I'm going to draw that. You already know the support and the resistances. I'm not going to draw the support and resistances again. And from this point to about here, 400 is where it seems to be, somewhere in the 400 range where it seems to be up move. So looks like it might chop somewhere over here, go and move a little bit higher, and then should resume its movement all the way to 480 again would be my perspective. Going on to the daily chart. Okay, so there you see the reason why it did poorly over this one was the head and shoulders on the daily. So this is the head. And then this is the right shoulder. And this is the left shoulder. That head and shoulders pattern makes it go all the way down. This is actually a decline. So remember, this is support for this stock in the 340 range, moved up very well. Candle still not looking good, guys. On a daily basis, I don't like this too much. Although this is a very big gap up, the market actually had to not do bad things, which I suspect from the end of the year now, my perspective is still muted. I'm not playing market yet. So since August, it's almost October now, August, September, and October, I've just sat out for most parts. I would expect it to continue to be in this range. May not be a bad idea to see if it actually hopes to move somewhere here, but there's quite a bit of resistance even here at the 425 range. So I'm going to draw that one resistance area as well. 425, 435 range. There's quite a bit of resistance, quite a bit of turn over here. There's a lot of supply coming up. So can it move down? It probably might, with some support in the 366 range to try and do this gap fill. But this is a strong peg for our earnings gap. The candle doesn't look good. So I wouldn't be surprised if it takes a little bit of a break to the 369, but heads up back to the 425 and finds some resistance. It has to break through this. Would I be a buyer here? No, I'm not buying Netflix yet. But if I want to take a position, I would wait for it to confirm. All the moving averages are flat in the short term, whether it's the 20-day, the 50-day, they're all flat. The RSI, look at the RSI, it had a huge jump up and then pegging down. So I would wait for a couple of days, see where this ends up, see if it actually moves a little bit lower, and then find a way to be able to see if this might move higher. So I'm not going to recommend buying Netflix. At the same time, I don't think it's going to go down that much either, but it could go in the overall market, might go down to the 360 range. That would be my first support. Thank you for following. Please comment, subscribe, share. Let me know what you think. And I'm trying to do even a weekly summary. Hopefully that'll come out in the next couple of weeks as well.